Thank you, Mr. Chairman. Chairman Bernanke, thank you so much for coming back again. Congratulations on a second term. I wanted to touch today on the federal budget deficit. I know it's been touched on a number of times, but certainly our federal budget deficit affects Fed policy and the outlook for growth and price stabilization. Can you touch on that? Can you touch on how that affects?
Yeah, the different mechanisms, to the extent that the fiscal thrust is expansionary, creates some additional growth that potentially would affect Federal Reserve policy, except we're at the zero bound, so we're not responding too much there. One risk that I've described is that if there's a long-term loss of confidence in the long-term capacity of the government to balance its affairs, that could raise interest rates today, which would have a drag effect on the economy. Another possibility, which I think is relatively unlikely, but is certainly possible, is that if there's a loss of confidence, again, in the government's ability to achieve fiscal stability, that the dollar could decline, which would have potentially inflationary impact on the economy. So there are a number of different channels through which large deficits or unsustainable deficits could affect the current economy.
I've heard various economists say that a deficit of 3% of GDP over the long term is sustainable, and anything beyond that is unsustainable. Is that a fairly accurate?
That's roughly right. The idea here is if you have a growing economy, you can run deficits and still maintain a flat ratio of debt to GDP, which is a sustainable situation. And normally that would involve having what's called a primary deficit, that is a deficit excluding interest payments of about zero. Normally that would involve about 2.5% to 3% of a total deficit, including interest payments.
Okay. So beyond that, it could have a destabilizing effect on the dollar and obviously and interest rates on top of that.
If protracted. I mean, for 1 year, it doesn't necessarily have a big impact, but if it looks to be going on indefinitely, certainly.
Okay. And in terms of the liquidity in the system right now, are we still facing deflationary pressures? Is that a part of your considerations in the months ahead?
Right now, we don't see deflation as an imminent risk, and neither do the financial markets, which seem to have inflation expectations around 2% or a little higher. But there are scenarios in which that would become more of a concern. But right now, we don't see that as an imminent risk.
Okay. And in terms of tax rates and financial regulatory policies and those larger issues, could we see a scenario where between high corporate and personal income taxes that we have an outflow of capital to lower tax regimes around the world? Is this a concern for our long-term growth, price stability, and full employment?
Certainly. In some sense, the cost of large deficits is that tax rates in the future are likely to be somewhat higher. And as I was talking with Mr. Hensarling, that can be bad for growth in lots of different ways. One possibility is that it makes the country uncompetitive relative to other countries in terms of their, tax costs of production. Although there are exchange rates and other factors would affect that, but clearly very high tax rates are going to tend to make a country less productive.
Okay. Now, over a 25 to 50-year horizon, are we going to be? You said over the medium term, we can't grow our way out of this structural budget deficit, to Mr. Hensarling's point. Over the long term, is that going to be possible, or is it going to require a pairing of spending?
Well, nobody really knows for sure, I want to emphasize, but we are an aging society, and so the fraction of the population that is working is going to be going down for a long time. And at the same time, the number of people who are going to be requiring Medicare and other types of assistance is going to be rising. So barring very sharp changes in our growth rate of productivity, I don't think that would be very likely, no.
Thank you.
The gentleman from Texas, let me say we have